What's going on, guys? Zay Molina here, and in this video, I'm going to show you guys how to calculate your lot size using proper risk. So first and foremost, when we're trading, guys, we want to use the same percent risk per trade. So I personally recommend risking 1 to 2% of your account per trade. So when we're trying to calculate this before each trade, what does this look like? Because 1% for a $100 account versus 1% for a $1,000 account are completely different things, right? So how do we calculate and know what lot size to use before every single trade? So that's what we're going to go over in this video. So to get started, we first have to know our base lot sizes. Okay, so we have the micro, which is a 0.01, and that is 10 cents per pip. We have a mini, which is a 0.10, and that is $1 per pip. And we have the standard, which is 1.00, and that is $10 per pip. So again, these are our base lot sizes. Now, we can also change the values. They don't have to be just ones and zeros. We can have a 0.02, a 0.03, or a 0.14, a 0.43, or a 1.23, a 3.67, right? Whatever it may be, we know that we can change these values based on all the digits that we have. We just got to know exactly what our lot size actually represents. So if we use a 2.00, that's going to be $20 per pip. If we use a 2.50, that's $25 per pip. If we use a 0.13, that's $1.30 per pip. Okay, so hopefully you get the idea, and it'll make a little bit more sense as we come down here and calculate our lot sizes. So getting into the lot size formula, as you guys can see here, it may seem a little bit complex at first, but I promise you it's very simple, and let's go ahead and get into it. So when calculating our lot size, there are 3 things that we need to know before we do so. Number 1 is going to be your current account size. Number 2 is going to be the percent we want to risk. And number 3 is going to be the stop loss on the very next trade setup. So what we're going to do is we're going to run through 3 different examples showing you guys how we would calculate our lot size with our formula and these 3 things that we need to know. So let's go ahead and get into it. And for our first example, let's say our current account size is $500 US. Okay, let's say we just deposited this into our broker and now we have this money ready to be traded. So the first thing we want to do is we want to take our current account size and multiply it by the percent risk per trade and divide that by 100. Okay, so essentially what this would look like is we want to take $500 US, multiply it by, let's say, for example, in this case, we want to risk with 1% per trade. We'll do 1 divided by 100. And when we calculate this, feel free to pull out a calculator if you need to. This is going to come out to $5 US. So what this is going to give us is this is going to give us the currency amount that we're going to risk on the very next trade, because this is 1% of our current account size. So what we do is we take this $5 US, and what we're going to do is now we're going to divide this by our stop loss on the very next setup. So let's say we have a nice buy setup on Euro USD on the 15-minute time frame. And let's say, for example, we have an even 15 pip stop loss. Okay. Now, what we're also going to do is we're going to take this and we're going to multiply it by 10. Now, the reason why we multiply it by 10 is because if you take a look at our base lot sizes up here, a micro is a 0.01, but it is 10 cents per pip. So the decimal place is off by 1 digit. So that's why we multiply it by 10, because when we calculate this, it'll automatically give us our lot size in the form that we need it to. Okay, let me show you what I mean by that. So when we come down here and we calculate this, 5 divided by 15 times 10 is 150. So 5 divided by 150, this is going to equal a 0.03 lot size. Okay, and this is our answer. Again, feel free to pull out a calculator and check my work, but this is what we're going to be using on the very next trade. So again, let's say we have a nice Euro USD buy setup. We have a current account size of $500 US. We want to risk 1% of this $500 on the very next trade, and the very next trade has a 15 pip stop loss. We want to use a 0.03 to be able to risk 1%, and that is how we're going to manage our risk. So real quick, I want to explain that if we did not multiply our stop loss by 10 here, we would have got 0.30, and that would have told us how much money we were going to risk per pip, because we know that a micro is 0.01, and that's 10 cents per pip. So this right here is 3 micros, 0.03, and this is going to equal 30 cents per pip. So that's why we throw that 10 in there, just to skip that extra step of dividing by 10 afterwards. And again, to check our work, we just mentioned that a 0.03 is 30 cents per pip. If we take this and we multiply it by 15, you will get $5. So if we take a loss on this trade, we only lose $5, and that is exactly what we wanted to risk on this trade. So this is how we use the lot size formula. Let's go ahead and do another example. So in this next example, let's say we have a little bit bigger account size at 2,000 US dollars, and we want to risk 2% per trade. Okay, so we want to take the exact same thing. We take our current account size, multiply it by 2 over 100, and this is going to give us 40 US dollars per trade. So for our very next trade, we want to risk 40 US dollars. So we take this, and now we divide it by a current stop loss. Let's say we have a nice sell setup on GBP JPY. And in this example, let's say we have a 20 pip stop loss, and we want to multiply that times 10. So we do 40 divided by 20 times 10 is 200. So 40 divided by 200, that is going to give us a 0.20 lot size, or 2 minis. And again, this is going to equal $2 per pip. Once again, we can go ahead and check our work. 2 US dollars per pip times 20 pips. This is going to equal 40 US dollars. So on the very next trade, we want to risk 40 US dollars. Let's do one more example of an account size that is not so perfect, like 2,000 or 500 US dollars. So in our final example here, let's say we have a $761.47 account size, and we want to risk 1% per trade on this setup. Okay. This is going to be a more realistic account size that you're going to come across as you've taken a few trades. So let's go ahead and do the exact same formula. So we take $761.47, we multiply times 1, which is our percent risk per trade, over 100. And this is going to give us $7.61. That is how much we want to risk on the very next trade. So what we want to do is we want to take this $7.61 and we want to put it in over here as our current account size. We want to divide it now by our stop loss. And let's say for this example, we have a Euro JPY buy setup, and this stop loss is going to be a 13.2 pip stop loss. So now that we see that our numbers are not so clean, this can seem a little bit more difficult, but again, we do the exact same thing. So now we take $7.61 divided by 13.2 times 10 is 132. So $7.61 divided by 132, we're going to get about a 0.05. And that is going to be the lot size we want to use on the very next trade. So when you actually calculate this, it comes out to about a 0.0576. And our lot sizes that you can see here, they don't extend past 2 decimal places. So with that being said, if we go ahead and check our work here, and we do a 0.05 is 50 cents per pip, and this times 13.2, this is going to come out to about $6.60. And as you can see that this is going to be a little bit less than our $7.61. So in this case, we're actually risking a little bit less than 1%. And the reason for this is because when we calculate this and we get 0.0576, we want to round down to the nearest lot size. So again, 0.0576 would round down to 0.05. And this is going to give us just a little bit less than 1% risk, right? We rather risk a little bit less than 1% than more than 1%. Okay. You could round up if you'd like and use a 0.06 lot size on the very next trade. But keep in mind that that is going to be a little bit more than 1% risk per trade. If we go ahead and check that here, we can say that if we used a 0.06, that would be 60 cents per pip times 13.2. And this is going to come out to about $7.92. So in this example, you see that using a 0.06 lot size, this would result in a little bit more than 1% risk. Using a 0.05, it would result in a little bit less than 1% risk. So in this case, that's entirely up to you on which one you'd rather use, depending on what you're comfortable with risking. So once again, guys, this is how you use the lot size formula and how you calculate your lot size, okay? Now, this can seem a little time consuming, and especially if you're trying to take a trade quick and market execute, this may take some time and you may miss some trades. So what we did here at Empire is created some spreadsheets to make it a little bit easier for you guys. So every member of IX Global that joins the Empire IX Telegram channel, you guys will get access to these spreadsheets to help you guys calculate your risk. Each of these spreadsheets have their own instructional video on how to use from start to finish. But I do want to mention in this video that on our exponential growth tracker, which is the first one here, we have a built-in risk calculator that uses the formula that we just went over. Okay, so all you got to do though is plug in the numbers of how much do you want to risk. I want to risk 1%. What is your current account size? Let's say you have a $578 US account size. Then you want to come in here and put what is your stop loss on the very next trade. You plug that in and it'll automatically calculate your lot size for you. So this may be a faster and simpler way for you guys to come here and calculate your lot size before every trade. And now in the second one here, our trade journal, where we can come here and track all of our trades. Come here and put in your initial deposit, your percent risk per trade. Then you fill out the spreadsheet for every single trade that you take, and it'll keep track of your account size as you go along. So you plug in what pair you're trading, what session you traded it. It'll automatically keep up with your current account size. You plug in your stop loss, your take profit. It'll calculate your risk to reward and your lot size here to let you know exactly what lot size to use on the very next trade to make sure you're using proper risk. So with that being said, guys, hopefully you guys got some value on how to calculate your lot size with the formula. And again, if you are a member of IX Global, all you got to do is join the Empire IX Telegram channel and you guys will get access to these spreadsheets, making it a little bit easier for you guys to calculate your risk. If you are not a member of IX Global just yet, go ahead and click the link in the description below and visit our website, www.empiretradegroup.com, or go ahead and get in contact with me via email or Instagram, and I can help you guys get started with us here at IX Global today. So once again, guys, appreciate you guys watching this video. Hopefully you guys got some value. Thank you guys, and I'll see you guys next time.